Hey there, welcome to Neppy Invest, the final part and part 3 of the ASX stocks I'll be watching in December 2020. Some fairly big news. One of the companies I'll be looking at today, they did release an announcement on the first day of December, and that was, I won't say if it's negative or positive until I get there, but in fact I'll be doing a separate video on that announcement from this company because it's a fairly significant announcement. And I might add another announcement from another company just because contrasting announcements, and we saw the share price do different things with those two announcements. But I'll talk about that once I get to that company. First of all, I'm going to talk about Galaxy Resources. So who's a big fan of lithium? It seems to be one of those commodities that's very much in favor, even if the price of lithium is in the doldrums. And the share price of all the lithium producers and explorers is in the doldrums, just like Galaxy Resources has been doing the last few years. Lithium seems to have its proponents, its supporters, and you won't see them think anything different. I'm not the biggest fan of lithium simply because there's a massive supply of lithium out there. There's a lot of abundance of lithium, and I think supply of lithium will never be challenged. So when you talk about lithium prices or any commodity prices, you have to look at supply-demand stories to see what's going to happen with the underlying commodity price. And I think you always see supply meet demand. In fact, on occasion, we might see oversupply of lithium. So I'm not the biggest fan of lithium, but I still will play lithium stocks. So I will buy for short-term movements in share price. And I have done that with Galaxy in the past. You can see with Galaxy share price going back from 2015 to 2018 on the chart here, we saw the lithium price go up. Galaxy Resources share price just zoomed up. But from January 2018 to a few months ago, we have seen the lithium price come back, and all the share prices of lithium producers and explorers pulled back with it. But we've seen a bit of a turnaround the last few months. Now, if we look at the shorter term chart here for Galaxy Resources, we can definitely see that from July, a good breakout in July, and then a bit of a test of the uptrend in September. We saw the share price go from $1.60 to about $1.10, and lots of volume coming into the stock. But once it hit the 100-day moving average, which is that blue line, it found support there and then zoomed it up again. So that was just the share price testing the moving average, testing a bit of support, and we've seen the share price go from $1.10 to $2.20. So you made double your money if you bought in at the right time there. If I remember correctly, they did a capital raising a few days ago, and that's a really good capital raising because the share price has gone up a lot. And they are a producer, so they do have a bit of revenue coming in, but they are not operating cash flow positive. They'll probably be hoping they can become that, but just because you're a producer doesn't mean you're necessarily a cash flow positive, and Altura Mining shareholders will attest to that. They were a producer, but went into administration, and I think news today has filtered through, or maybe not even filtered through, it has become official that Pilbara will be taking over Altura Mining, and that's to the detriment of all Altura Mining shareholders, but that is a different story. So the next company, McPherson. So this is the company which I was alluding to had a significant announcement today. I won't talk about the announcement. I won't show you what happened, but it did sort of, probably the best way to say is it did hold true to what's been happening with the chart. And if you go back to about 2 years ago, we did see the share price about $1.25, and I was thinking actually buying into McPhersons at that point. There was a few companies I was thinking of buying, and I ended up not buying McPhersons, and I won't say I regretted it because I'd never regret not buying or buying into a company, but the share price went from $1.25 all the way up to $3 fairly quickly, and you never like to see that when you decide not to buy a company. But during the COVID-19 panic, the share price pulled back to, again, about $1.20. Again, I did not buy in, and then the share price went all the way up to almost $3.50. Now, about a month ago, we did see a bit of weakness in the share price, and looked like a new downtrend was developing, and that downtrend has been confirmed. And the share price has just plummeted over the past month, and there has to be some sort of reason for that. So went back through the announcements to have a look at any announcement that could trigger or was a catalyst for this decreasing share price. And all I could find was this trading update on the 20th of October, which sort of coincided with the large down day on large volume on the 21st of October. So I think this announcement was released after close on the 20th of October. So the reaction from the market was on the 21st of October, the day after. Now, when I looked at this announcement, I didn't see anything overly worrying about it, but the market disagreed with me, and maybe some shareholders disagreed with me too. But I didn't see anything that bad with it. But the market is smarter than me, so I always believe the market. If the market didn't like it, and we saw the share price just keep going down from then on. So it's gone all the way down from $3 all the way to $1.90 at the close on the 30th of November. Now, here's a problem with some investors, some value investors. They'll see the share price like $1.90 yesterday at close, and they'll go, gee, about a month ago it was $3, now it's $1.90. This is cheap as chips. And this is when recency bias plays havoc with our decision making. We always think of the share price was $3 back then, now it's $1.90. That's way cheaper than it was. I should buy in. That's sort of the wrong way to think of it. The right way to think of it is falling for a reason. What is that reason? I didn't see any reason. The trading update didn't give me really any clues, but the market wasn't liking something. And then today, they released a trading update, a profit downgrade, and the share price plunged 34% from $1.90 all the way down to $1.19. And that's why the market wasn't liking the story being played. The market saw something it didn't like. I couldn't see that. The market did see it, and that's how you can get some clues from how the share price is trading. Yeah, some people might say there was some insider information that leaked, or there was leaked information, and that's what drove the share price down. Or it could be that the market was really savvy about the success, or the McPherson successful failures they were doing. So I'm going to talk about that announcement in a different video, not this video. Next company is Fluence. So going from a bad story to a good story, Fluence. This is a company I've been following for a long, long time. Been waiting to buy in, but it's been in a downtrend for ages. I really like what this company is doing, the sector they're in, how they're going to help humanity moving forward. They're into water management, wastewater management, that sort of thing, which I think is going to be a highly priced or prized sector, industry moving forward. Anything to do with water, water management, wastewater management is going to be much prized in the future. And we've seen a bit of a breakout on October 29. So share price really reacted really positive to the news that the Ivory Coast project is moving forward, and the share price has just moved upwards since then. So this is a company that I want to buy, want to hold for the long term, and I have no doubt that there is potential, especially if management can fulfill the promise of this company, that the share price is going to be significantly higher than it is now. And I think this is a company you can have confidence that they're going to do good for humanity. Decmil. So the chart I put on the left, I've just weeded out the moving averages because it looks very ugly. And you can see why it looks ugly, because about a year ago, the share price was $3.50. Now, technically it wasn't $3.50 because they did a share consolidation, 10-to-1 share consolidation, if I'm led to believe. So that means instead of, I forget how many shares they had, say if they had 1 billion shares, if they went for a 10-to-1 consolidation, instead of 1 billion shares, they've got 100 million shares, and that also means the share price goes up by 10 times. You don't make 10 times your money, you just have 10 times less shares, and the share price goes up 10 times. So the share price went from like 6.8 cents to 68 cents. So share price wasn't $3.50 1 year ago, it was like something like 35 cents. Anyway, share price has taken a massive hit over the past year or so. I think it was up to $1 or $10 on the share consolidation ratio. They had lots of bad news, just one bad news story after the next with Decmil. When potentially that bad news news cycle has now gone. And we're starting to see more good news coming into the story, more contracts, although always a bit wary of the contracts because it could be low margin contracts. But the main thing I'm looking for is a bit of an uptrend developing in the share price, and we are seeing that. So here's the shorter term share price, and we're starting to see a bit of a good uptrend developing. What I want to see in the shorter term is 70 cents get overtaken, and want to see the share price move above that 70 cents. That 70 cents now is a price of resistance. It's hit it 3 times now and has pulled back all 3 times. So if it bursts through 70 cents on good volume, that would be a great time to buy as a good trading, package or whatever. I'm not even sure what I want to say there. As a good trading strategy. Anyway, market cap's only 87 million. They have lots of revenue, lots of contracts, so revenue is probably going up. The only question, again, as I mentioned before, is just the margins they have with all these contracts. And I would like to see the operating cash flow positiveness come back into the business. They did have like $100 million of cash about a year ago. That's been whittled down because of bad stuff happening. So next thing I'm going to look at is coal. So 3 companies I'll be looking at here. So coal is a much maligned commodity, and rightly so. It's a dirty commodity. It's becoming cleaner, but we're going to see countries try to get away from coal more and more as we move through time. But just because it's a much maligned industry, commodity, that sort of thing, doesn't mean you can't trade it. And in 2015-16, the same sort of thinking was there. Well, why would you buy coal? It's awful. There's no future in coal. And then from 2016 to 2018, the price of coal just shot up, and we saw all these companies that were coal producers, share price shoot up. So you can trade the underlying commodity or the companies based off the underlying run of the commodity itself. And that's what I do. And then between 2018, July 2018, and just a few months ago, the price of coal just went off a cliff. And of course, share price of all these companies, that's Whitehaven Coal, New Hope Coal, and Yancoal, all their share prices went off a cliff too. But we've seen a bit of a sign of a turnaround in the coal prices. Now, there are some interesting facts or some interesting news stories with coal, and especially in regards to China. Last time I heard, lots of coal ships with lots of coal on them were outside of some ports in China, and they weren't being unloaded because the China were acting like a spoilt teenager in the past month or so, being a belligerent teenager, acting all bratty towards Australia, and who knows how long that's going to last. I'm not sure how these companies are being affected by that. In fact, Yancoal is at least partly owned by a Chinese company or partly owned by China. I'm not even sure exactly. I should do a little bit more research into Yancoal, but they have some sort of Chinese connection there. So I'm not sure how or what sort of coal has been affected, whether it's thermal or coking coal. So I'm not 100% across this yet. I'm going to do a bit more research in the coming weeks in regards to coal for a potential short-term, medium-term play. So let's consider some of these companies. First is Whitehaven Coal. You get to see the share price, how it's reacted over the past month or so with the increasing in the coal prices. Share price of Whitehaven's gone from just above 80 cents all the way to $1.40. So it looks like even the moving average is starting to turn. Some good volume coming in, so it looks really good. On the top right hand there, I've got the market cap of all 3 companies, revenue and operating cash flow. If you look at all 3 of those, you probably think, in my opinion, looks like Yancoal might be the best bet, but I think the market is staying clear of Yancoal just because of their Chinese connections. You can see operating cash flow 1.3 billion, market cap only 2.8, so lots of operating cash flow. And if we start to see the coal price really take off, those operating cash flow for all these companies is going to increase significantly from where they are now, and these companies are going to look really, really cheap. New Hope, just like Whitehaven, we've seen share price take off in the last month or so, and a very similar story for Yancoal, but maybe not quite as much. Share price has gone from $1.90 to $2.10, so Yancoal has potential to run much more than the other 2 companies, I think. But I think there is potential that because the market's going to be a little more hesitant about buying into the Yancoal story just with their Chinese connections. So anyway, that's all I got for the ASX stocks I'll be watching in December 2020. Some of these companies I'll be watching further into 2021 and potentially even into 2022 and beyond. Hope you've enjoyed this video. If you have any comments, leave it in the comment section. Otherwise, I'm not a professional advisor. So if you do need to seek professional advice, make sure you seek out someone who is qualified and can help your own circumstances. Have a good day. Talk to you later.